Good afternoon. Today is March 1st. Happy March and happy Women's History Month. This is the hearings on the Ways and Means Committee, and we are starting out with the wonderful delegate from Howard County, Delegate Jessica Feldmark, who will be presenting House Bill 1247. That is a delegation bill. So whenever you're ready, Delegate.
Thank you so much. Good afternoon, Madam Chair, Mr. Vice Chair, and committee members. For the record, I'm Delegate Jessica Feldmark on behalf of the Howard County delegation presenting House Bill 1247. This is a local bill authorizing Howard County to establish a tax credit for seniors to offset any increase in the property tax rate. It would apply to individuals who have lived in their home for at least 30 years, have a combined income no greater than $75,000, and are at least 65 years old. Any increase attributable to a tax rate greater than $1.014 per $100 of assessed value would be eligible for the credit. And that is based off of the current property tax rate in Howard County. This is enabling legislation. It passed the Howard County delegation unanimously, and I respectfully request a favorable report, and I'm happy to answer any questions.
Are there any questions for Delegate Feldmark? Okay, seeing none, that concludes the testimony on House Bill 1247. Thank you, Delegate Feldmark. Next, House Bill 1337, Delegate Hornberger, whenever you're ready.
Okay, great. Thank you, Madam Chair. For the record, Delegate Kevin Hornberger here. And what this bill seeks to do is to level the playing field and have fair and transparent elections. And some of you might not be familiar with this because none of you reside in these districts, but there are currently 2 districts on the Eastern Shore that have a special type of law that applies to them in electing their delegates as representatives. And what this bill would seem to do, his intent is to remove that requirement. So the way that this works is that if you were a resident of District 36, which involves 4 counties, you would go into the voting booth, and it is an at-large district, which is to say a 3-member delegate district. At the tail end of each person's name would be the county that they reside in. So for example, it would say Jeff Greist, and then parenthetically, Caroline County. And you, as a voter, can only choose 1 per county, okay? You can choose more than 1 per county, but those votes won't be counted because only 1 delegate from a county can win the election. I know this is very confusing, so I'm hoping that there's some questions here. We do have AG opinions that say that this is in fact legal. However, it disenfranchises not only folks that are running from places like Caroline County, which are the smaller portion of the votes because that county is cut in half, whereas the other counties are there in full. But it also makes it so that they can't vote for and have someone win from their home county unless no one else is running from the other counties. Additionally, this sets up a scenario where the 2nd or 3rd highest vote getter could not be elected if the 1st or 2nd highest vote getter was from the same county. So I'm just going to repeat that. Someone could be a 2nd or 3rd highest vote getter in the election, win it fair and square. But if there was another person from that same county, which is very plausible, they would not be elected to the House of Delegates. This gets even more complicated with the 2-member district that's in 37 because they have 4 counties and 2 spots. So it's not transparent to voters. It prevents the highest vote getter from actually being seated. And we feel that repealing of this law would go a long way for fair elections. And I'm happy to take any questions that the committee might have.
Questions? And we also have Jared Demarinis here and Mary Wagner from our Board of Elections, if anybody has any questions for them as well. Delegate Feldmark.
Thank you, Madam Chair. So just to clarify, your bill completely does away with the county designation or recognition, and for the district, regardless of how many counties are included in that district, you would simply go with the highest vote getters regardless of where they reside.
Yeah, so just to answer your question, it does two things. One, it removes the name of their county at the end of their name.
Mm-hmm.
And of course, that is an inherent advantage if you reside in the largest population county in that district, right? Because folks are going in from that county and seeing their county there. That's part one. Part two is it lifts the requirement that you can only have one per county. So it would make it so the highest vote getters are the ones that get seated.
Okay,
Yep.
thank you.
Great question. Yep.
Questions? Okay, seeing none, that concludes the testimony on House Bill 1337. Thank you.
Thank you.
Next, House Bill 1162, the Vice Chair, and there's one witness for 2 minutes after the Vice Chair.
Thank you, Madam Chair. For the record, Delegate Alonzo Washington here to testify on House Bill 1162. This bill clarifies Maryland campaign law to grant membership entities additional flexibility in how they collect campaign-related donations with their membership dues. Currently, membership organizations such as the Maryland Realtors or any other trade associations charge members for a political contribution along with their membership dues. Unlike the other portion of the membership dues, political contributions to the PAC must be voluntary. This legislation in front of you all would allow for members to have a choice between giving to the PAC or having that contribution go to a non-campaign related purpose or function of the association. Members would still be clearly informed about their right not to contribute to campaign related efforts. Finally, the bill also establishes a cap on the amount of political contribution of no more than 25% of the total dues of the members. This cap currently does not exist in law. The legislation doesn't otherwise affect any contribution paid outside of the members' dues billing. For these reasons, Madam Chair, I respectfully ask for a favorable report. Thank you.
Bill Castelli, please, for 2 minutes.
Thank you, Madam Chair. Bill Castelli on behalf of the Maryland Realtors. I'm not going to repeat what the Vice Chair just said about the effect of the bill, but a couple of years ago, we had members look at how we actually collect dues. And as a voluntary part of that dues collection, we include an amount that a member can contribute to the Political Action Committee. That has always got to be voluntary. But we do know that some of our members do like to contribute to our advocacy side of what we do, even though they may not be comfortable giving to a campaign related. So one of the questions that we had, and when we looked at the law, it didn't seem like the law was very clear on it. We reached out to the Board of Elections. They felt that the law should be clarified in order to give this choice so that some members who weren't comfortable giving to the PAC would still be able to participate in our advocacy. The way we've structured it in the bill is we do issue-related campaigns. Last year, for example, thank you, Ways and Means, we did an issue campaign on the homebuyer savings accounts. So that would be something that we would use this money for. So it would give options to our members, those that are comfortable doing the campaign-related contributions. And traditionally, we've had about anywhere from 20 to 30%, although last year we had a little bit higher in terms of giving to the PAC. And then other folks that would like to participate in advocacy, but just aren't comfortable on the election side would still be able to do that as well.
Thank you. Are there any questions for the Vice Chair or Mr. Castelli? Delegate Hornberger.
Thank you, Madam Chair. Just a real quick question, and I do really like that this bill is being brought forth. More transparency is always a good thing. This is just in terms of union members. Would that include union members that are in the private and public sector? Could you just give some clarity about the the population that this impacts?
Yeah, it's to membership organizations. So that's like dues paying members
Okay,
that
okay, gotcha.
aren't collecting it through like an employer. Like most, I'm not aware. I think all of the unions actually do it through the other section of the code, which is as an employee deduction from their businesses. And
Yes,
this is a different section of the code, which is for, like, for example, we're a dues member organization. It's not deducted from any of their employers. The bankers, the Farm Bureau, there's a lot of medical specialties that have a dues paying organization that aren't, in that other kind of section that I think most of the unions use.
Okay, great. Thank you for that clarification. Thank you, Madam Chair.
Questions? Okay, seeing none, that concludes the testimony on House Bill 1162. House Bill 1186, Delegate Riley, and then there are two witnesses for 2 minutes each after Delegate Riley. Is Delegate Riley in here? Yes, I see you. Okay, welcome whenever you're ready.
Thank you. Good afternoon, Chair Atterbury and Vice Chair Washington and the members of the Ways and Means Committee. For the record, I am Delegate Theresa Riley from District 35B, here to introduce House Bill 1186, which is Property Tax Credit, Elderly Individuals, Veterans, and Surviving Spouses, Alteration of Duration. During the interim, I had several people that asked me to look into this property tax credit in Maryland to see whether it could be extended beyond the 5 years. After looking into the issue, I found out that it was not that simple due to the constraints of the uniformity clause in the state of Maryland's Constitution. I sought an opinion from the Attorney General, which you have in your bill file. Basically, the AG, the Attorney General, said that the credit could be extended for an additional 5 years, but not more, and not to where it would not violate the uniformity clause. So if you would please note the Attorney General's opinion dated November the 2nd, 2021 in your file with the highlighted portion at the bottom of the letter in the footnotes. You would notice with taking the AG's opinion in consideration, HB 1186 will allow local government governing bodies to alter the number of years available for the tax credit from the current 5 years to 10 years for our seniors over 65, veterans, and their surviving spouses and or surviving spouses. The bill allows local governments to opt to offer the credit to their residents and still remain compliant with the uniformity clause. This will enable Maryland to keep its retirees, its veterans, and their families in our state, and will also is a way to show them, there are many thanks for their dedication to the state of Maryland and for the commitment to their local communities and staying put. I have seen that there is an amendment from MACO. I believe they're going to testify. I would be happy to conform my bill to that. That Senate version does not have a cross file, so this could be a cross file to that. But my concern is that that may violate the uniformity clause to where mine does not. So I will leave that to the good folks, my colleagues on Ways and Means, to figure out which best to be able to support our veterans and continue this process that our local governments can at least add another 10 years for these folks for this credit. So I respectfully ask for a favorable vote on House Bill 1186, and I'm happy to take any questions.
Thank you. Next, we will have Theresa Kunz for 2 minutes, please. Oh, I see Delegate Barnes. We'll do questions after the other two.
Thank you, Madam Chair, Vice Chair, and members of the committee. My name is Theresa Kunz. I'm here on behalf of the Maryland Realtors. We support HB 1186 and believe it will help keep vulnerable property owners in their homes. In a January 2022 survey by American Strategies on the Maryland housing market, 49% of Marylanders feel a strain on their budget as a result of the amount they pay in housing each month. This is up 5 points from 2020. 1 in 5 voters are now worried about missing a rent or a mortgage payment in the next 3 months, while 40% of financially strained Marylanders are considering a move because of housing costs, which is a 6% increase since 2020. Seniors face a particular challenge, with 59% saying there is too little housing for older people who are looking to downsize or have special needs, including our disabled veterans. This is up 8% in just the last 2 years. According to the state's DCHG's Maryland Housing Needs Assessment, by 2030, more than half of all our new households will be in low-income qualifications. The expansion of property tax credits like these will assist these residents who are most likely on fixed and limited incomes, and Maryland Realtors request a favorable report. Thank you.
Thank you. Next, Kevin Canale, please, for 2 minutes.
Good afternoon, Madam Chair and members of the committee. Kevin Canale here on behalf of the Maryland Association of Counties in support with an amendment. I think the delegate alluded to it. We certainly support this bill. We'd like to get anything we can in terms of extending this optional credit. Many counties are interested in extending this as much as they can. So we would appreciate eliminating the limits on the duration and the amount. But if all we can get is 10, we certainly support that as well. And we'd ask for a favorable report. We hope that the committee can look at this, and we're happy to be at the table and help with that. But we'd love full flexibility. We'll take the 10 if we can get it. And I'd appreciate a favorable.
So, questions, Delegate Barnes?
Thank you. Since Kevin just brought it up, can you explain your amendment and what would it do?
So thank you, Delegate. Our amendment would simply just strike any provisions that limit the duration and the amount. So right now, you're limited to 5 years and not more than 20% of the total property tax as the credit. We would like to have full flexibility and say no limitations on the time frame, no limitations on the amount. Give counties that flexibility if they wanted to bump that up in either area.
Okay. And Delegate Riley, roughly how many elderly individuals or veterans and surviving spouses are participating in this property tax credit? Any idea?
I do know in my county, the county executive, Barry Glassman, sent a letter in. Currently this year alone, residents in just Harford County is 3,767 that are taking advantage of this credit.
All right, and I didn't have the fiscal note. What's the fiscal note on this?
I think because it's enabling, it would really depend on.
Yeah, it doesn't really give you an amount in the fiscal notes because, some counties are doing it, some are not. So it would depend on the counties.
Do you know in your county, which has 3,000 and something taking advantage of it?
Yeah, he did. It doesn't show an actual total. Does it show total? There are 3,000. Residents will be, okay, so the credit there, the credit is an average of $500. Yeah, he doesn't give a total of how much it costs the county as a whole. But again, because it's enabling the counties, I'm sorry.
That's about $1.5 million just in your county alone that they're providing tax credits to. That sound about right?
Probably with the 3,767.
All right, thank you.
You're welcome.
Delegate Palakovich-Carr.
Thank you, Madam Chair. Good to see you, Delegate Riley. Do you know at this point how many counties have taken advantage of the enabling legislation or law that's in place now?
I do not. It's possible Kevin may know that from Mako.
I can follow up with you directly, Delegate Palakovich-Carr. I think I have a guesstimate, but I don't want to tell you the wrong number. So I'll follow up.
No worries. And also, I'd be curious to know for the counties that have enacted it, what limitations they put in place in terms of the home value or income limits or other restrictions like that that have been enacted. So I'll look forward to connecting with you offline about that, Kevin. Thank you.
Yes, and they certainly are different because when I originally had looked into, expanding this, if you look on their websites, they can come up with their own legislation or regulations of how they go forward with this, and they do vary. They are different. So we'll work on getting that for you. Thank you.
I might add as well that I actually did research on this exact issue over the interim, Delegate Palakovich-Carr, so I'll be happy to share that with you. But Do we know how many counties do this and what their local laws are?
Oh,
That'd be great. Thank you.
You're welcome.
thank you, Stan.
You're welcome, Delegate Riley.
Other questions? Okay, seeing none, that concludes the testimony on House Bill 1186. Thank you. Thank you, Delegate Riley.
Thank you.
Delegate Feldmark, you are back. House Bill 1138. And there are 3 folks after you. So whenever you're ready.
Thank you, Madam Chair, and good afternoon again. For the record, Delegate Jessica Feldmark, presenting House Bill 1138. So this bill provides for easy application and, in very limited circumstances, automatic renewal for the homeowner's property tax credit. So this committee is already familiar with the homeowner's property tax credit. We've heard several bills over the years dealing with it, and had a briefing actually at the beginning of this session on some of the study work that was done over the interim. So this bill implements some of those recommendations. You may recall that last year I had proposed an automatic renewal bill. This refines that by simplifying the application process. So instead of having a separate application process through SDAT, this would allow individuals who may qualify for the homeowner's property tax credit to actually apply through their income tax return. And the reason we took this approach is that much of the data needed, required in the application is already reported on the income tax return. And we can have a notice added to the return that says folks, may be eligible if they meet these standards. And if so, complete an additional form. That form would then only have to include the data which is required for the homeowner's property tax credit application, but not already reported on the income tax return. So it simplifies the paperwork for the individual applying for the tax credit. And then the comptroller's office can share that data with SDAT to actually confirm eligibility and issue the tax credit. There are, as I mentioned, in very limited circumstances, provisions for automatic renewal. So those are for individuals whose income is so low that they're not required to file an income tax return, or for individuals 65 or older with no one else living in the household other than a dependent, and with their only sources of income being Social Security or a pension. So in those limited cases, because the income information to assess eligibility would be consistent year to year, SDAT would be able to process those renewals without requiring additional application. Now, we do have a safeguard in place that anyone who's eligible for that automatic renewal will receive a notice from SDAT that they're being renewed unless any of the information that would be relevant has changed. And if any of the information has changed, they're required to report that to the department. So I know we've got a few folks here to testify who are experienced helping individuals claim this tax credit. So I will let them give you more detail, but happy to answer any questions and ask for a favorable report.
Next, Allison Harris, please, for 2 minutes.
Good afternoon. I'm Allison Harris. I'm the director of the Home Preservation Project at the Pro Bono Resource Center of Maryland. I'm here as a legal services provider of tax sale and other homeownership related services to homeowners in Maryland. I testified before this committee at the briefing on January 18th about the importance of the homeowner's tax credit because we have seen firsthand that the credit is crucial to preventing the loss of the family home for so many vulnerable homeowners. I've submitted my written testimony to this committee in favor of HB 1138, but today I wanted to elaborate on the story of my client, Janet, who also testified at that briefing before you all on January 18th, by adding a few key details to help you understand what exactly happened to her and how the passage of HB 1138 could have helped her and others in her situation. As I said in my testimony at that briefing, I can confirm definitively that the failure to apply or to reapply for the credit in a timely manner frequently lands families in tax sale. Janet would have been one of those, but for the fact that she came across my desk as our estate planning client at a clinic and mentioned her property tax situation. During the course of her consult, we learned she had delinquent property taxes and was worried about her losing her home, which was her only asset. Janet is 68. She's owned her home for 22 years. She does not have a mortgage, and her monthly income, her annual income is less than $15,000, which is food stamps and Social Security. She had the homeowner's tax credit for many, many years, relied on it to be able to afford her property tax bill because after credits, she most years owed nothing or less than $100. For some time now, she's been going to local outreach center for help with her income taxes. In the spring of 2021, she went for additional help with the property taxes because she was concerned and confused about the effect the stimulus check money would have on her homeowner's tax credit application. She met with an employee at that center who said he would complete the forms. She didn't hear back. She kept calling. No one answered her. She later found out he quit. The center director said she would apply, help her take care of it. Again, that did not happen. In the meantime, the October 1st deadline passed and the homeowner's tax credit for Janet had not been applied for that year. She got her tax.
Ms. Harris, I'm going to have to ask you to wrap up your testimony, please.
She got her tax bill was $2,400. After I helped her get her credit, they had to ask for an exception from SSTAT for her to get her exception. It was made down to zero after she got it, which is the only way she was able to continue to afford her property. By the time we meet with these clients, it's just too late. And this HB 113 would help out people in that situation who, but for some reason, would have applied, could have applied, should have applied. Thank you, Madam Chair and the committee for the members for the opportunity to testify.
Thank you. Next, Lorna Henry for 2 minutes, please.
Good afternoon, Madam Chair and members of the committee. My name is Lorna Henry and I'm a staff attorney with Maryland Legal Aid. Maryland Legal Aid assists a lot of people who would greatly benefit from the passage of this bill, particularly our older population that is already receiving the credit, whose income does not change much from year to year. This bill would also benefit homeowners with its ease of application and its convenient automatic renewal. By providing notice of the tax credit, along with the form to be completed at the time a resident files their state income tax return, and then having the comptroller submit the tax credit application to SSTAT on the homeowner's behalf, an elderly homeowner would not have to take the additional time and expense of duplicating information and documents on their tax credit application that is already on their tax return. Maryland Legal Aid has seen many clients who would benefit from this bill. In particular, last year, a 78-year-old resident contacted Maryland Legal Aid to determine why her mortgage payment had increased by an additional $500 each month. She had owned her home for over 15 years and was current on her mortgage. However, she had not applied for the tax credit in 2020, which was the first year of the pandemic, and she did not realize that was the sole reason for the drastic increase in her mortgage payment. She thought she would lose her home, but we were able to help her get the tax credit application and save her home. This bill would prevent this scenario from happening, as it will require that a homeowner apply once, and then after that, they will be eligible every year as long as their financial information did not change. Maryland Legal Aid supports this bill and asks that this committee give it a favorable report. Thank you for your time.
Next, Aja Mallory, please, for 2 minutes.
Madam Chair, members of the committee, my name is Aja Mallory. I'm the Consumer Staff Attorney at the Maryland Volunteer Lawyer Service, where we connect volunteer attorneys to low-income Marylanders. This committee has my written testimony, but I want to emphasize the story of Miss Karen. Miss Karen, who just turned 90 years old this year, made sure to apply for the tax credit every year. Ms. Karen was hospitalized last year for an extended period and missed the deadline to apply for her tax credit. This tax credit pays for Ms. Karen's entire property tax, and without the credit, she is not able to afford to pay her property bill because her sole income is Social Security. I was able to get Ms. Karen her retroactive tax credits, but the tax credits were applied after the tax sale deadline, and her home was narrowly missed being included into last year's tax sale. Ms. Karen is very similar to many clients that we see at MVLS whose income and living situations don't change, and they would immensely benefit from the automatic renewal. So we request a favorable report for House Bill 1138. Thank you for this time to testify.
Are there any questions? Delegate Long?
Thank you, Madam Chair. The question I have is, if we make this automatic that they get it each and every year, how would we know that if, I hate to say it this way, if that person owns a property no longer is alive and in the property? How is there some type, how are we going to be able to track that? And also, the simplified form, would that be given out, let's say, if whoever does their taxes would give it to them, or would this be given to them automatically once they filed their state income tax?
Thank you, Delegate, for the questions. To answer the first question, SDAT would have all of the data available from their records and other state agencies. So this, I think when we say automatic renewal, it's maybe a little bit misleading. It's automatic on the part of the recipient of the tax credit, right? But SDAT is still verifying through all of the data that they have that the individual is still eligible. So that would be something they would be checking to make sure that the individual is still eligible and the tax credit should still be granted. On the second question, which I'm so sorry, Delegate, I lost my train of thought. Can you remind me what your second question was?
Don't feel bad. It happens to me too. The second question is the streamlined application. If, let's say, for instance, you go to a software and you fill it out. I don't know what software they use, but you have this automatic software that you can get for free, fill out your income tax, and it automatically emails it in, from what I understand. How would that work if you do that? And back to my original question, first question was, so they would check vital statistics to find out if these people are still alive and still eligible to receive the tax credit. If someone would pass, I'm just curious, how would we document to make sure that it doesn't go on to whoever?
Well, if someone passed away, then the ownership of the property would transfer then. So they would have a record of that.
Not necessarily. It doesn't have to.
Delegate Long, if I could just answer that. So the Department of Health maintains death records,
right,
and that would be the primary source of information.
Right. So SDAT would have to clarify through SDAT. I mean, SDAT would have to clarify each and every time that there was a death or someone was still alive, or would they automatically let SDAT know that this person passed?
The bill leaves it up to the agencies to establish a data sharing arrangement.
Okay.
And that's already done. Like the Board of Elections and the Department of Health share data on deaths all the time. That's done now within state government.
Right. I thank you, Stan. I appreciate your answer. I was just curious. We're going into new territory, and I was just had that question. And just because someone passes doesn't mean that the house is transferred out of their name. It could have been a life estate and they don't have to transfer it, or it could have been many reasons that someone passes and they don't have to transfer a deed. That was my question. So thank you, Stan.
You're welcome.
And so then Delegate Long, to your other question about the forms, that would be part of the comptroller's office would have that new form as part of the tax form. So that would be available online or, through any updated tax form system. So tax preparers would have that information as well.
Right. I think it's a great bill. I just had a few questions. Thank you.
Are there any other questions? Okay, seeing none, that concludes the testimony on House Bill 1138. Thank you, Delegate Feldmark. Delegate Ruth, House Bill 1089, and there are 3 folks after you that will have 2 minutes each to testify. So whenever you're ready, Delegate Ruth.
Thank you, Madam Chair and members of the committee. For the record, I'm Delegate Sheila Ruth, and I'm here in support of House Bill 1089. In 2022, I can sign documents, put in a contract on a house, or sign my tax return with an electronic signature. Electronic signatures are legal and used almost everywhere, except for ballot petitions. These petitions, intended to place a local question, a political party, or an unaffiliated candidate on the ballot, must still be signed on paper. So these ballot questions, these ballot petitions, are a right guaranteed in the Maryland Constitution. So this is essentially a voting rights issue. These are rights guaranteed in the Constitution, but right now, if I want to exercise those rights, I must be able to physically sign a piece of paper, generally in the presence of a circulator. Even if I self-certify by signing as both the signer and the circulator, I still then have to return that piece of paper to whoever is collecting the signatures. And so this process can be particularly burdensome for people with disabilities, transit-dependent people, or people who work long or irregular hours or multiple jobs. HB 1089 would allow ballot petitions to be signed electronically, which would lower the bar for access to this democratic right for all Marylanders. In 2020, because of the COVID state of emergency, the State Board of Elections allowed electronic signatures for ballot petitions on a temporary basis due to the pandemic. So we know it can be done safely and easily. HB 1089 requires the State Board of Elections to adopt regulations to specify requirements for secure storage and use of voter data, as well as procedures for collecting electronic signatures. When electronic signatures were allowed in 2020, the State Board of Elections continued to verify electronic signatures in the same way as those affixed to paper. And that's important. We're not talking about like a change.org petition. We're talking about signatures that are actually individually verified in the same way as signatures on a ballot. So this ensures that they will not be a vehicle for frivolous or fraudulent signatures. These petitions are important for a lot of different reasons. One that's particularly, there's a couple particularly important to me. One right now, you'll hear about in a few minutes, to expand the Baltimore County Council by adding 4 seats to it. And Linda Dorsey Walker is going to speak about that. And also one that I support from the Baltimore Transit Equity Coalition, to get these questions on the local ballot, on the ballot for local jurisdictions. But even for things which I may not agree with, it's still a right guaranteed in the Constitution, and we should make it accessible to as many people as possible. So I thank you for your time, and I ask for a favorable report on HB 1089.
Thank you. Next, Andy Ellis, but I do not see Andy Ellis in here.
Madam Chair, he got called into a work emergency.
Okay, thank you. Next, Linda Dorsey Walker, please, for 2 minutes.
Yes, good afternoon. My name is Linda Dorsey Walker, and I'm here as the chair of the For More for Baltimore County Ballot Issue Committee. And the reason I'm coming to you is, yes, one of the things we're trying to do is expand the size of the county council, which now has the largest number of residents per county council member in the state of Maryland, and that shouldn't be the case. What we're trying to do is directly impacted by your decision today. Specifically, we're charged with collecting a minimum of 10,000 certifiable signatures by August. And because we've been told that there may be some that become disqualified, we need to collect closer to 12,000. We went before the State Board of Elections, I did, in January, and asked, as you heard Delegate Ruth describe, for a third emergency renewal of what had already been approved twice before in 2020 and 2021. This time, however, the state board said, look, now's the time for this to be done, not by us, but legislatively by you all. And so that is part of the reason that I'm here today. I'm hoping that you will allow us to collect these signatures. Let me tell you what I had to do in order to sign up for the ballot issue committee. For the first 2 pages, I had to provide my demographic information, but on the third page, it said, leave your electronic signature. I said, okay. It gave me a choice of 3 things: last 4 digits of my social security number, or my Maryland driver's license number, or my Maryland voter's card information. I checked off one of them, and 30 seconds later, bam, I got a big green check mark that said, you've been verified by the State Board of Elections. Why shouldn't someone who's not setting up some huge legal entity like a ballot issue committee, some working mom, a senior, a disabled person, why shouldn't they be given the same right to just say, I think there's enough reason to have this question put on the ballot? They should be given that right. Now, by not allowing us to have that right, it's becoming very difficult to get people to be petition circulators. Even though some people think COVID may be over, not everyone's in agreement with that. And so it's not just a concern of the petition circulator, but also the people who will be approached by strangers to ask for their signature. If we already allow people to go online and electronically renew their passport, so long as it hasn't expired, and also to renew your car registration, and also to get a voter ID card, and if all those different examples already exist, and those are far more legal and serious actions than just saying, yeah, I think it's enough reason to maybe put that question on the ballot. Why shouldn't the average citizen be given that same right? Thank you, and I appreciate you letting me speak today.
Thank you. Next, Samuela Anasa.
Hi, good afternoon. Thank you, Chair Atterbury, Vice Chair Washington, and Delegate Ruth for bringing this bill. My name is Samola Ansa, and I'm the voting rights advocate at Disability Rights Maryland, which is the state's protection and advocacy agency mandated to advance the civil rights of people with disabilities. DRM supports HB 1089, which will allow electronic signatures for ballot petitions. The State Board of Elections allowed electronic signatures to be accepted as a response to the coronavirus pandemic, but will now revert back to handwritten ink petitions, which places barriers on voters with disability, particularly blind and low vision voters and others with physical disabilities who have a hard time providing physical handwritten signatures. Only allowing physical handwritten signatures excludes voters who cannot provide a physical signature from participating fully in their local political and electoral process, which is effectively silencing a whole community whose input is invaluable and necessary. Title II of the Americans with Disabilities Act requires that states, counties, and local governments provide accommodations to allow people with disabilities full participation in the services, programs, and activities they provide. Making electronic signatures a permanent fixture of ballot petitions would be a reasonable accommodation for voters with disabilities to allow them full, equal, and clear participation in the electoral process. Not only would this benefit voters with disabilities, but all voters, as the pandemic required all of us to find new and innovative ways to connect through technology. For these reasons, DRM urges a favorable report on HB 1089. Thank you.
Thank you. Are there any questions for Delegate Ruth or the witnesses? Okay, seeing none, that concludes the testimony on House Bill 1089. Thank you, Delegate Ruth. And next, Delegate Charles, and we should have some folks here from E&T. Haley, are they in here? I'm just scanning.
Yes, they're all here.
Okay, I see Delegate Weibel, Delegates Frazier Hildago, and Delegate Healy. Hello. Okay, so calling House Bill 1104, Delegate Charles, when you're ready.
Thank you, Madam Chair. Good afternoon, Chairwoman Atterbury and Vice Chair Washington and members of the Ways and Means Committee. For the record, I'm Delegate Nick Charles. I'm pleased to testify on behalf of HB 1104, which is the Affordable Housing Land Trust Funding and Property Tax Exemption. Just a quick thing. What this bill requires is that the Department of Housing and Community Development extend practically reserves for 2.5% of community development block grants funds for non-entitlement areas for award to affordable housing land trusts in those non-entitlement areas. Two, it also establishes the intent of the General Assembly that the entitlement areas award 2.5% of the CDBG funds to affordable housing land trusts. And three, exempts specified property held by affordable housing land trusts from state and local real property specified property held by affordable housing land trusts. Where this bill came from was the issue that's been pertaining to a lot of Black and brown communities specific to our country. One of the things that Prince George's County specifically has dealt with, if you've been paying attention in the news, is historically the undervaluing of our communities. When you look at communities within communities like Prince George's County, our homes are so undervalued that we are sitting here daily coming to Annapolis trying to make sure we can get enough resources to pay for our school system due to these particular issues. And so in dealing with this, I reached out to the Brookings Institute and I asked them to figure out ways that we can attack some of these issues of the undervaluing. And there was a package of bills that was provided to me. And this was one of those particular bills. So I have some expert witnesses here with me with Stuart Yasker, with Makeda Henry Nicky, who they should already be in here, to go into further detail about how this bill will help communities like Prince George's County and other Black and brown communities across the state. Madam Chair, I am going to pass it on to Stuart Yasker and Makeda Henry Nicky to now dive into further detail about the bill, if that's okay.
Yes. Stuart Yasker for 2 minutes, please.
Thank you, Chairwoman Atterbury, Vice Chair Washington, and Delegate Charles, and members of the Ways and Means Committee. My name is Stuart Yasker. I'm from the Economic Architecture Project and Ashoka, and I'm grateful for the opportunity to join you today to speak in favor of HB 1104. As we all know, Maryland has some of the fastest gentrifying communities in the country. This means that Maryland residents are facing some of the greatest pressures of displacement. This creates economic disruption. It undermines the strength and vitality of communities that Maryland residents are so rightfully proud of. And it can have irreversible impacts on the long-term prospects for Maryland residents. As we looked around the country at innovations that are working, community land trusts are emerging as an innovation that enables development without displacement and that they're effective. By separating the ownership of land from ownership of the building, community land trusts can insulate homeowners from rising home prices. And Maryland has already taken a step forward with more than a dozen community land trusts. Today, Maryland has an opportunity to take a step forward to create an enabling environment that provides residents with secure housing. HB 1104 is informed by the success in other states, and it makes targeted changes that can make a real difference. I ask you to support HB 1104, and I'll yield back my time, and I'm available for any questions that might be helpful. Thank you for the opportunity.
Thank you. Next, Makeda Henry Nicky, please, for 2 minutes.
Good afternoon, distinguished members of the Ways and Means Committee. My name is Makeda Henry Nicky. I'm a research fellow at the Brookings Institution. However, I note I'm here today in my personal professional capacity to support HB 1104. This bill seeks to stabilize affordable housing land trusts by providing sustained funding earmarks to encourage long-term housing affordability in the state of Maryland. These earmarks would directly commit subsidies to CLTs, which when capitalized into their land holdings will permanently reduce the home prices for the chain of buyers, both present and future, who benefit from owning CLT homes. Now, by virtue of this mechanism, through ground leases, the value of the land is separated from the leasehold improvement, which makes it extremely affordable for homeowners. But this structure locks CLTs into a very low revenue stream that is clearly too insufficient to support their housing production activities. They need to hire staff, provide homeowner training programs, and find funds to finance their pipeline of funds to support their housing activities. Every man-hour spent applying for grants or loans means less resources available for acquisition and training. Even inflation and increasing interest rates also threatens their financial viability. Now, beyond training, CLT ground leases even allow these organizations to intervene in a foreclosure process should a need to cure default arises. So I'll say that CLTs provide DHCD with an incredible opportunity to advance affordable housing for low-income buyers, but they need reliable, systemic level funding through a combination of dedicated CDBG subsidies and property tax relief to address significant appreciation in land prices just nationwide. I note there are constructive ways to extend HB 1104 to consider, for example, the treatment of multifamily CLT projects, such as condominiums, and to be creative about using the property tax toolbox. Nonetheless, I urge the Ways and Means Committee to vote in favor of this bill. Thank you for the opportunity to win on this important legislative proposal.
Thank you. Next, we have Andre Perry, but I do not see him in the room. Andre Perry.
He's not in today. He had a family emergency, so he had to back out today.
Thank you, Delegate. Daniel, and I'm not going to pronounce your last name.
It's Larenberg.
Thank you.
Thank you.
2 minutes, please. Go ahead.
Thank you, Chairperson Atterbury, and thank you, Delegate Charles, and other members of the Ways and Means Committee. My name is Daniel Larenberg. I am a board member of the Community Development Network of Maryland. I am also an affordable housing attorney who is working with a number of what they call in Maryland affordable housing land trusts, which are the same as community land trusts. To start with, our organization is favorable to the bill that Delegate Charles introduced. Without going into the details that others have talked about, the funds are definitely needed for them to fulfill their mission, and the real property tax relief is very important. There are two amendments I would like to propose to the bill. One was raised, and that has to do with condominium developments, which are multifamily land trusts. The current Residential Condominium Act says that you cannot have a residential condominium on a leasehold interest. Affordable Housing Land Trusts and the Affordable Housing Land Trust Agreement has been exempted from ground lease provisions because ground leases are disfavored in Maryland, and that's not the purpose of the Affordable Housing Land Trust organizations. So I ask you to exempt affordable housing land trusts from the prohibition of leasehold interest in the condominium bill, the residential condominium law. The second thing has to do with real property assessment. When the property, the home, is owned by the CLT landowner, they pay taxes, but their price of reselling the home is restricted. There is a provision that says that the assessment is supposed to take that into account. However, SDAT is having a hard time determining how that should be done. So I have two proposals. One is that I do have language as to how that restriction is supposed to be implemented. And second, SDAT does have an assessment manual. They do have a chapter on conservation land trusts. And again, I propose that they also add a chapter on how to assess community land trusts. Thank you very much.
Thank you. Next, Kevin Canali, please, for 2 minutes.
Good afternoon, Madam Chair and members of the committee. Kevin Canali here on behalf of the Maryland Association of Counties in support of House Bill 1104 with an amendment. So I understand everything Delegate Charles said, and I've heard from the advocates for this bill, and I think it's a great idea. And we know that affordable housing land trusts do provide affordable housing to low and moderate income families. And that's certainly something counties are invested in and want to make sure continues. However, with this bill being, the tax provisions extend, I think, to 2062, we're just a little bit concerned about how many of these land trusts could pop up and how much that would affect local revenue. So we're just asking for some local input on these decisions so that we can have that ability to manage our revenue structures. And like Delegate Charles said, when he came on, Prince George's has trouble coming up with funding for things like education. We want to make sure that we don't see an influx of these and that we don't really know how much revenue we're being asked to give up here when it comes to our property tax, which is the biggest source of income for local governments in Maryland. So again, we really support the concept. We'd love to have this tool in the toolbox, but we just think that local governments should have some input here when it comes to exempting these taxes for affordable housing land trusts. And with that, we'd ask for a favorable with amendments on House Bill 1104.
Delegate Plakovich-Carr with question.
Thank you, Madam Chair. And actually, this is for whichever witness wants to weigh in. I have two questions. The first is, what is a non-entitlement area in terms of the community development block grants?
This is Dan Larenberg. A non-entitlement area is the money, the CDBG money goes to the state, and then the state then allocates it. So those are for more rural and smaller communities.
Okay, thank you for that clarification. And then the second question, and I realize this might not be a number that anyone has off the top of their head, but, and I welcome, follow up after the hearing on this, but so the bill sets aside 2.5% of the CDBG money. Do we have any sense now of what percentage of those funds are going to affordable housing land trust properties currently?
No, we don't. And it would be helpful to have some more data transparency around, how these funds are flowing. We do have the inventories coming out of the DHCD's reports, but understanding exactly what kinds of projects on the ground these funds are going to support would be really helpful.
Thank you.
I've also, because I'm working with affordable housing land trusts in Maryland, my understanding is that, at least with the ones I work with, they receive very little CDBG funds, if any.
Okay, any other questions? Okay, seeing none, thank you. Thank you to our colleagues from E&T for joining us. And that concludes the testimony on House Bill 1104. Delegate Branch, House Bill 1196. And after Delegate Branch, there will be 6 individuals who will testify for 2 minutes each. Delegate Branch, whenever you're ready, please.
Thank you, Chair Atterbury and colleagues of the Ways and Means Committee. For the record, I'm Delegate Chanel Branch, presenting House Bill 1196, Tax Sales Alternative Collection Programs. This legislation will assist homeowners in keeping their property by allowing payment plans for those who are behind in paying their property taxes. This bill will also authorize counties or municipal corporations to cancel or postpone a tax sale during a state of emergency. Homeowners across the state have been experiencing financial hardships as a result of the pandemic. Add to those who may have already been struggling to pay their property taxes, let alone mortgage. And it's almost impossible for homeowners to salvage their properties. I believe this legislation will provide assistance to homeowners in need, allowing homeowners behind on property taxes to pay those taxes, and payment plans provided opportunities that aren't available at this time. This assistance will help to reduce the number of vacant homes across the state, and this bill would also increase the chances of property taxes being paid, thus making it a win for all parties involved. This would especially provide some protections for populations who are easily preyed upon, such as elderly, disabled, and low-income homeowners. Today, I ask you for a favorable report. Thank you.
Thank you. Next, Councilwoman Ramos, please.
Good afternoon, Madam Chair, members of the committee. My name is Odette Ramos. I am the City Councilwoman for the 14th District in Baltimore City. It's really great to see all of you. I'm here asking for your support of HB 1196. This bill comes from all of the years of work that many of us have done to help to reform this predatory tax sale system that we have in Maryland. As the delegate said, and thank you, Delegate Branch, for sponsoring the system that we have. Residents are losing their homes or having to make choices between paying the investor who bought the tax lien and eating or paying for their children's clothes or for their medications. So what our bill does is it enables jurisdictions to allow for payment plans to work directly with residents to be able to pay the taxes. It also enables jurisdictions to remove people from the tax sale and not have to sell those liens, but we would still have to pass an ordinance in the city and other jurisdictions as to the certain criteria. And it also enables jurisdictions to cancel the tax sales. It provides options for jurisdictions on how to reform their systems or on who to work with to be able to help them pay their taxes. This is strictly enabling. It gives so much flexibility for our jurisdictions. I'm grateful for Maryland Association of Counties support. I'm grateful also, you'll see in there a letter in the bill file from Baltimore City Mayor Scott. Baltimore City is right now ingrained and really working hard on tax sale reform because we believe strongly that we want to keep people in their homes and prevent vacant houses, more vacant houses. And so this bill is a way to move us in that direction. And I really appreciate your support. Thank you very much.
Kevin Canali, please, for 2 minutes.
Good afternoon, Madam Chair and members of the committee. Kevin Canali here on behalf of the Maryland Association of Counties in support of House Bill 1196. I think Councilmember Ramos laid it out very, very well. This provides another tool for counties to keep people out of the tax sale process. And of course, no county wants any property to go to tax sale if it can be avoided. And we strongly believe that homeowners receive all counseling, education, information, and support that can be available to them, any additional assistance when appropriate to help them pay on time and avoid going through tax sale. We're excited about this bill. We were happy to support a statewide program last year that created the Taxpayer Protection Program, sort of a statewide program, and we would enable localities to do this now locally under this bill and to pass ordinances, as Councilmember Ramos said, to help keep people out and to work with them on the side to keep them out of that private tax sale process. So we think this is a great bill. We think that it provides a lot of options for local governments who are interested in doing this. There are many, and we'd ask for a favorable report on House Bill 1196.
Next, Aja Mallory, please, for 2 minutes.
For the record, my name is Madam Chair and members of the committee. For the record, my name is Aja Mallory, and I'm the consumer staff attorney at the Maryland Volunteer Lawyer Service. Tax sale affects the poorest homeowners and our most vulnerable populations here at MVLS. It contributes to vacant and abandoned homes across the state. For instance, my client, Paul, he applied for the homeowner's tax credit, but he still had a balance. He needed to provide his county an additional letter of proof to, in order to get more credits to him. But instead, his home was placed into the tax sale, and it took one of our volunteer attorneys nearly a year to resolve this matter for him. Additionally, Paul was charged more interest on his tax sale than usual. And it took our attorney to file a complaint against the county in order to recover those taxes that were applied to his property as well. Paul should have never gone to tax sale because of this additional letter of proof that was required for him. An error resulted in his home being included in the tax sale, and HB 1196 would allow counties to have more options when it comes to tax sale or removing someone from tax sale, so we can prevent situations like my client Paul. Thank you for this opportunity to testify, and we request a favorable report for HB 1196.
Next, 2 unfavorables. Ari Platt for 2 minutes, please.
Thank you, Madam Chair. Good afternoon, Mr. Vice Chair, esteemed members of the committee. My name is Ari Plout, and I'm here on behalf of the Maryland Tax Sale Participants Association in opposition to HB 1196. We're an association of community investors, attorneys, and business owners. We work collaboratively with counties and municipalities in tax collection. Mr. Neil Eskin is also on the line, and he'll be able to answer more into detail because he's the expert in this field. I did want to thank Delegate Branch for meeting with us to discuss some of the concerns that we have with this bill. And let me just state that the vast majority of foreclosures are not homeowner occupied. We oppose this bill primarily because of Section C. We believe there already exists criteria to remove properties from tax sale. There are already existing programs throughout the state to help vulnerable citizens. Actually, if you look at the fiscal note, it discusses some of these. For example, a governing body of a county or municipality can withhold an owner-occupied residential tax sale from between the years 2021 to 2023. A tax collector can also withhold residential property with taxes that amount to less than $750. We don't really have issues with Section D. We would just ask that you would strike Section D2, so it would only read D1, so that a county or municipality could postpone a tax sale if the governor declares a state of emergency. And just in conclusion, I would just ask that you wait for some of these programs that are in existence to take place and see how they can help. And with that, I thank you for your time and ask for an unfavorable report.
Next is Neil Eskin, but I do not see him. Neil Eskin, are you in the room?
Yes, I'm here. Can you hear me?
Yes, I see you now. Yep, go ahead, please.
Okay. Good afternoon, Madam Chair, Delegate Branch, and members of the committee. My name is Neil Eskin, and I am a representative of the Maryland Tax Sale Participants Association, which works to ensure the Maryland tax sale process is efficient, effective, and equitable for all parties, and that it will continue to be an available and much needed tool for Maryland counties. The Maryland Tax Sale Participants Association opposes HB 1196. Current law, as stated by Ari Plout just now, both on the state and county levels, especially Baltimore City, already provides many opportunities for struggling and vulnerable Maryland citizens to avoid tax sale, as well as helpful programs that can assist if a homeowner does end up in tax sale. Recent legislation has been passed to ensure tax sale is in fact fair and equitable. And my organization that I'm a part of, we do as much as we can to support these initiatives and to assist homeowners when we can. Specifically, current law already allows counties to withhold properties from tax sale if certain criteria is met. Additionally, current law already allows counties to postpone and cancel a tax sale even when there is no state of emergency. Unfortunately, there's a false narrative that most homeowners who enter tax sale will likely lose their home or face hefty fees and costs. It was actually the Maryland Ombudsman annual survey report in 2021 that stated that out of over 600,000 citizens of Baltimore City, only 100 actually ended up in foreclosure, and even that amount, from my experience, ends up being properties that are not homeowner, and they're actually vacant and causing blight to the property. So tax sale is providing a much needed tool to help collect taxes and prevent blight. We can confidently attest that most homeowners are paying the delinquent taxes prior to fees and costs being incurred, and we have consistently worked out payment plans with struggling homeowners, assisted homeowners with reducing fees and costs, and in many cases, even forgave the entire tax delinquency. So limiting the use of tax sale as a tax collection tool will hurt the city, will hurt the state, Maryland counties, and the city, and ultimately Maryland taxpayers. There's, like I said, so many programs out there and changes, and we just have to give it a chance before we start reinventing the wheel. For those reasons, Maryland Tax Sale Participants Association opposes this bill and urges a unfavorable report, and I'm happy to answer any questions. Thank you for your time.
Thank you. Next, Nanika Namdi, please, for 2 minutes.
Good afternoon. My name is Nika Namdi. I'm the creator of Fight Blight Be More. We are an economic, environmental, and social justice initiative aimed at remediating blight in our communities. I stand in support of implementing payment plans for delinquent property taxes via House Bill 1196. Last year, our organization launched the Stop Oppressive Seizures Fund, along with Parity Homes and our collaborators at MBLS. During last tax sale season, we raised $81,000 in small dollar donations to bail out 65 homeowners from tax sale. I know folks probably think that's great, but I don't. We should have never been compelled to hold a bake sale to protect our neighbors from tax sale. The homeowners most impacted by tax sale are Black, elderly, low income, and disabled. Tax sale is uniquely predatory for its ability to disappear homeowners' equity and the homeowners themselves for the benefit of investors. It destroys the fabric of community by displacing long-term residents and creating clouded titles as some tax certificate purchasers foreclose on homeowners in a last-ditch effort to collect, but never take title to the property and never pay property taxes during the time that they have title. This leaves many homes cycling in and out of tax sale for years on end. Central West Baltimore, where I live, neighborhoods like Harlem Park and Poppleton have been decimated by tax sale. It's one of the many policies that produces and maintains blights. There's simply no reason why homeowners who get behind in their property taxes aren't able to set up a payment plan directly with the municipality. Even banks allow deficiency spreads for homeowners who have missed mortgage payments. Allowing payment plans is smart because the cost of tax sale and the cost of tax sale foreclosure is often death. That's even if it's only 100 homeowners. 100 people losing their properties, 100 families losing their properties is not acceptable, especially not to benefit investors. Again, we support House Bill 1196 and urge a favorable report.
I had somehow skipped over you, Ms. Namdi. I'm sorry. That's why committee, she was a little bit out of order. I see questions. Delegate Patterson.
Thank you, Madam Chair Atterbury, and thank you, Delegate Branch, for bringing House Bill 1196 to our attention. The question is really for Councilwoman Ramos. I'd like to applaud you for continuing your advocacy for those without homes and those who many times don't have a voice. And I've heard the opposition citing many opportunities and programs, etc. I did a cursory look, couldn't find them readily, but I do want to ask you this question. You may be aware of the programs that were cited, but do you feel that having item 2, that is enrollment in a payment plan, a payment program, is that another tool that citizens can use, a very useful one?
Thank you, Delegate, for that question. And of course, it's great to see you. Yes, we actually tried to do this in Baltimore. We passed legislation to create installment plans so that somebody can pay their taxes not just 2 times a year, but every month. But we were not authorized to provide payment plans like that for people whose taxes are in arrears. So that's what this bill does, is allow us to create payment plans for people in arrears that the city creates. One of the people in opposition basically said that they create the payment plans, but we don't even want to get that far. We don't want to have to sell the lien to an investor. That's the goal. And so this legislation would allow us to do those payment plans. It would also allow us to add more criteria for who can be removed from tax sale. Right now, the only criteria that the state has enabled us to use is if the person is low income, is a senior or older adult, or is a low income. And we want to be able to work with all of our homeowners. And so having these options is really important to us. So thank you for the question.
Well, thank you.
Any other questions?
Can I just add one thing as from the opposition?
Well, no, unless somebody has a question. Does anyone have a question? Okay, seeing no further questions, that concludes the testimony on House Bill 1196. Moving on to House Bill 1039, Delegate Lukey, and there are 7 folks signed up after Delegate Lukey who will testify for 2 minutes each. So Delegate Lukey.
Thank you, Madam Chair. And we've already heard this session, some legislation related to community solar projects, so I won't reinvent the wheel here in front of you. Just as a reminder, community solar is an option for folks who might not be able to install solar on their own property, essentially allows them to buy into larger solar projects. And it's one of the tools in Maryland's toolbox for our transition to a clean energy economy. This bill does a number of things related to community solar. So first of all, it reduces tax burdens for community solar projects that are developed in places where we really want to incent the development of solar, and where lacking incentives, solar companies might look elsewhere for installing solar. That includes rooftops, brownfields, landfills, clean fills, and agrivoltaics, which I'll explain in just a second. So those incentives consist of an exemption, a complete exemption from personal property taxes if the system is installed in those places, and a 50% credit to the real property tax obligation for brownfields, landfills, and clean fills in particular. It also requires, specifically for agrivoltaics, as you know, one of the big controversies in solar power in Maryland and elsewhere in the country has been that the cheapest place to build solar power is on farmland, right? And a lot of farmers say, well, I worry that too much farmland is being converted and it's going to undermine agriculture. Agrivoltaics are the best of both worlds. So agrivoltaics allow for the production of solar energy on land while still continuing agriculture on that land. So for example, an agrivoltaic system might allow a rancher to continue to graze cattle underneath the panels, things like that. So the bill requires that land which hosts agrivoltaics should be continued to be zoned as agricultural land and be taxed at the agricultural assessment rate, rather than being taxed as industrial or commercial land. And then further, because we are trying to make sure that the incentives that we pass in this committee are doing what we hope of them, the bill also creates a study that will look at the effectiveness of these incentives for the expansion of community solar projects in the state of Maryland. And with that, Madam Chair, I will turn it over to the people testifying, and I urge a favorable report.
Thank you. Next, Ed Brolin, please, for 2 minutes. Ed Brolin. I see here he comes.
Apologies, just took a minute to get online. Apologies. Good afternoon. My name is Ed Brolin. I'm the Director of Market Development for Con Edison Clean Energy Businesses. Con Ed CEB is the deregulated affiliate of the utility up in New York, and we're the nation's second largest developer of clean energy projects, active in markets across the country. I testify today in support of House Bill 1039 in particular, and of agrivoltaics and other ecosystem services generally. As we seek to decarbonize our electric industry and to beneficially electrify buildings and transport, it's becoming increasingly evident that we will need a substantial amount of land to host the solar arrays, which will replace much less land-intensive fossil fuel-fired generating facilities. In fact, the Net Zero America Project's interim report estimates that nationwide, in a high renewable, high electrification future, which we're trying to achieve, we're going to need the equivalent of a West Virginia-sized footprint for the solar that will be required. Now, while we can and should do everything that we can to site solar on the built environment and in preferred areas, natural and working lands will need to shoulder a substantial portion of the load in this effort. Happily, solar and natural and working lands are completely compatible. Unlike other forms of development, land use change for solar actually provides an opportunity to preserve our natural capital and to provide critical ecosystem service benefits. One such benefit is food provision or agrivoltaics. House Bill 1039 is an important step forward as we develop our path forward in the state, which recognizes the natural capital value of solar and begins the critical work of determining how we can site, design, build, and operate the solar that we need while preserving our invaluable natural capital for future generations.
Thank you. Next, Leslie Elder, please, for 2 minutes. Leslie Elder. Give her a second. She is on here. Okay, we might have to circle back to Miss Elder. Rob Gargiola, please, for 2 minutes.
Sure. Rob Gargiola with Compass Advocacy on behalf of the Coalition for Community Solar Access. Thank you, Madam Chair, members of the committee, and I also want to thank Delegate Lukey for his sponsorship of this bill. He did a good job providing an overview of it. Basically, look, the least expensive place to build community solar is an ag. And what this bill is intended to do is provide incentives to build community solar in places other than ag. What I will say about community solar is that these are smaller projects. These are not the 100-acre or 1,000-acre projects. These are 2-megawatt projects that range between 10 to 20 acres. As Delegate Lukey said, there are essentially a few incentives. And I want to emphasize these incentives are temporary. They sunset at the end of 2025. We're meant to study them. The first thing is there's no personal property tax if a community solar project is built on a rooftop, a brownfield, a landfill, or a clean fill, or if it's agrivoltaics, kind of the dual use that Delegate Lukey was discussing earlier. What I will say, because you're going to hear from some, well, maybe we should just make this authorizing for local governments since it's a local tax. And what I would say is the goal here is essentially to have a 3-year window to look at this. And if we allow counties to authorize, some will, some won't, it's not going to give us a good snapshot, or the MEA, I should say, that's the agency that will be studying this, whether this was an effective incentive or not. The second aspect is we already have a 50% exemption on personal property tax for all electric generating equipment. So we're just basically talking about, for the other 50%, make it 100% for community solar for these specific locations, non-ag locations, unless it's dual use, and believe it's a state policy that the state should pursue essentially for 3.5 years of this pilot study. The other aspect is a 50% reduction in the real property tax, which is state and local. And then finally, keep it zoned agriculture when doing agrivoltaics. And again, I want to emphasize this would be a temporary pilot program. The MEA would study it, determine whether or not the goal, the objective of incenting community solar development in areas other than ag to help pencil out these projects to make them cost effective for those low and moderate income subscribers of community solar. And with that, one last thing, Madam Chair, in reading the fiscal note, it appeared that this would be applicable to all existing community solar projects. And what I would like to say is that was not our intent. And we would be happy to have an amendment added to this bill that basically said it would only be new projects after June 2022, which is the effective date of the bill. It's not the intent to provide a tax credit for existing projects. We really want to see, will this change behavior? And that's the result we're looking for from this MEA study. So with that, would urge a favorable report with an amendment to clarify that one aspect of it. Thank you, Madam Chair.
Next, Leslie Elder, please, for 2 minutes.
I think she's gone. She had a problem. She couldn't unmute herself.
And she had messaged and said she was good to go. Okay.
I just got a message from her that says I still cannot unmute.
Okay. Maybe perhaps Ms. Elder get off and then come back in. In the meantime, we'll move to Lucy Bullock-Seeger, please, for 2 minutes.
Thank you, Madam Chair and members of the committee for the opportunity to speak today. I'm Lucy Bullock-Seeger, the Director of Strategy for Lightstar Renewables, which is a national developer of community solar agrivoltaic systems, and we're currently sourcing sites in Maryland. I speak in support of HB 1039. Although we would like to develop more sustainable agrivoltaic systems, which would secure and stabilize productive family farms for the next generation, agrivoltaic systems are currently not financially viable in the Maryland market. Lightstar develops projects that place the land and farmer first. We do that by designing the array with the current and future farm operations in mind from day one. This can be as simple as spreading the rows farther apart or raising the panels a few feet higher, though sometimes this does come at an increased cost HB 1039 offers a simple, cost-effective way to incentivize this innovative farmland conservation strategy that does not negatively impact ratepayers. Although we understand that there may be some concern about potential lost revenue to municipalities, our projects would still be paying real estate taxes and other local taxes for the life of the project, which is typically 20 to 30 years. The tax exemption for the equipment used for our systems is not insignificant to Lightstar, and we could help turn our planned standard ground-mounted solar arrays into food-producing agrivoltaic systems. In order for these systems to be successfully farmed, we need a dedicated farmer to ensure that the land remains in production over the life of the solar project. In order to do that, in other markets, Lightstar pays a stipend in addition to land lease payments to the farmer for their time, operational costs, and maintenance of the land and project. These tax exemptions would allow us to pay a stable and meaningful stipend to the farmer to keep this parcel in production, therefore guaranteeing a family farm keeps providing crops and livestock for the next generation. We applaud Delegate Lukey and the Assembly for thinking of creative solutions for both our regional food systems and clean energy goals, and we urge a favorable report for HB 1039. Thank you so much.
Next, Nathan Greenberg, please, for 2 minutes.
He's not here.
Okay, thank you. Justin Fiore for 2 minutes.
Thank you, Madam Chair. Good afternoon, Madam Chair, Mr. Vice Chair, committee members. Justin Fiore here on behalf of the Maryland Municipal League in support of House Bill 1039 with amendments. This session, there seems to be a general push for community solar programs to grow well beyond its original purpose that's in the pilot program. And while that isn't a bad thing, the program has not received a thorough cost benefit analysis or a review of all the available incentive structures. The sheer number and scope of bills this session speak to the need for a study now, not after giving away local revenues, to be clear, for the life of the project, not just the 3 years the application window's open. As you heard, that's 20 to 30 years. Beyond just this committee, the General Assembly has legislation this session that expands the definition of course, into brownfields, to agricultural lands, to expand the program cap from 2 megawatts to 5 megawatts. So we're talking about 40 plus acres. There's bills to establish a land use study, an incentive study. And just today, I also found out about a bill in ECM that would remove the requirement that the project be located in the same service territory as its subscribers. If that last bill and this were to pass as introduced, you would see the state mandating one local government provide an incentive to a project that serves residents in a different jurisdiction. That would be like you passing a bill that requires a Maryland business that serves Pennsylvania customers. It doesn't add up to us. It speaks again for the need to study this as a pilot program now as it nears its conclusion. In the meantime, we'd be happy to support the bill with amendments that make it authorizing for local government and allow us to set certain criteria like ensuring those benefits meet our residents. We respectfully request a favorable report on House Bill 1039 with those amendments.
Next, Leslie Elder, please, for 2 minutes. You made it.
I'm so sorry about all the technical difficulties.
That's okay.
Thank you, Chairwoman. I appreciate it. So thank you so much, Chairwoman and the committee members. The Coalition for Community Solar Access would like to submit testimony in strong support of House Bill 39. CCSA is a national trade association charged with opening and maintaining community solar markets across the country, and we utilize best practices to do so. We represent over 80 member companies, some who are headquartered in Maryland and others who are investing here. House Bill 1039 proposes to make necessary changes to the pilot program to make market economics more viable for projects on and agrivoltaics. So this legislation simply creates an innovative test for the Maryland Community Solar Pilot Program to incentivize development on preferred sites and explore that farmer-driven opportunities that others had previously testified on. For community solar, siting projects in a manner that matches the desires of local jurisdictions and absorbing the higher cost of development has truly been challenging. So this legislation will also encourage innovation and new technologies to be incorporated into the community solar pilot program. This is really important because the U.S. Department of Energy just made a commitment to power 5 million homes with community solar by 2026. there's going to be an increased need to develop a wide variety of types of projects that this bill will actually support. And importantly, it improves the siting concerns for local jurisdictions. Now in our 5th year, preferred siting projects have become financially unfeasible, and this bill will change the economics in that short period of time to be able to test out these projects. Lastly, House Bill 1039 is intended to only apply to new projects and sunsets at the end of the pilot program, with the study to design to see how effective this is. As stated before, this bill is a short-term solution to incentivize these projects in the final years of the pilot program. Thank you so much for your time and consideration, and we hope that we can count on a favorable report.
Thank you. And last, Kevin Canali, please, for 2 minutes.
Good afternoon, Madam Chair and members of the committee. Kevin Canali here on behalf of the Maryland Association of Counties in support of House Bill 1039 with an amendment. I think you heard a lot of my testimony from Mr. Fiore from MML. I'll echo what he said in terms of the number of bills that we're seeing this year and how this bill could potentially play into other bills that pass or don't pass, particularly bills that want to, again, raise the community solar cap from 2 to 5, do away with the sunset. I think there are a lot of questions in terms of what this bill could mean in the long term. I understand the intent of the bill, and if we could get some guardrails on this bill to do what the proponents are saying, and then also to make sure that these exemptions do not carry on past the end of the pilot program, we would certainly appreciate that very much. So we're looking for some local input here. We're looking for flexibility. We certainly want to site community solar on brownfields, gray fields, rooftops, not on our prime ag lands. I think agrivoltaics is interesting, and I think it's something we want to explore, but we'd like to have the flexibility locally to do that. So with that, Madam Chair, we'd appreciate a favorable report on House Bill 1039 with amendments to provide some local flexibility.
Questions for the bill sponsor or any of the witnesses? Okay, seeing none, that concludes the testimony on House Bill 1039. Thank you very much. House Bill 1282, Delegate Hornberger, and there are 7 folks signed up to testify after Delegate Hornberger, who will have 2 minutes each. Whenever you're ready, Delegate Hornberger.
Thank you, Madam Chair, and second bill today. So very excited to present HB 1282, Property Tax Agricultural Use Assessment. So as you know, earlier in the session, I presented a bill that dealt with Fair Hill, and I had alluded to the fact that we're one of the largest counties in horses per capita. And where I'm going with this is that many of our streams of income in Cecil County, actually the #1 employer in Cecil is agribusiness. And it comes in many different shapes and forms. It could be a farm brewery, a farm winery, a equine center or training, for example. And traditionally, all of those entities that I just described and many more dealing with agriculture were in a different tax category than a corporate business, a brick and mortar store, retail department that you would go to that is not located in a rural area. However, recently, the Comptroller's Office has decided to start assessing some businesses, and doesn't seem to be any consistency on what those businesses are, with the same tax rate that you would find in corporate locations, such as those brick and mortar stores. We've sought input from the Comptroller's Office, and they're insistent that they have the authority to do this. However, the folks that did capital outlay and invest in their farms and have different streams of incomes, again, located on those farms, are now looking at a tax liability that historically they did not even budget for. So what this bill would seek to do is to preserve what they've always been doing. I would draw your attention to the fiscal note where it tries to project what the new tax income would be. But keep in mind, this is income that was never going to be captured anyway. We want to incentivize these type of businesses in rural areas so that they don't get developed and so that farmers can stay on their farm and continue to do farm related activities. This bill has had a hearing in the Senate already, and it is my understanding that MACO is working on an amendment to further clarify this and hold harmless. However, I have not seen that amendment yet, and I definitely support the spirit of it, but don't want to weigh in until we see it in writing. So with that, we have a number of folks signed up to testify, including the Farm Bureau in support. and I'd love to take any questions. Thank you, Madam Chair.
Thank you. Colby Ferguson for 2 minutes, please.
Thank you, Madam Chair, members of the committee. Colby Ferguson on behalf of Maryland Farm Bureau here in support of House Bill 1282. I think Delegate Hornberger did a great job of kind of laying out the issues. Our biggest thing is that for years, for decades now, these farms, whether they be agritourism operations or farm breweries or farm winery, horse operations have been assessed as agriculture, buildings are agriculture. And now, after decades of doing the same thing, now all of a sudden, State Department of Assessment and Taxation has decided that now these are commercial. And so over the last 6 months or so, they've been going out and starting to reassess buildings, in some cases doubling the property taxes. And so for a farm operation that's already lean and mean and trying to stay afloat, particularly through pandemic conditions and downturns and increase in cost of production, the last thing we need is to double the property taxes on top of that. So I agree, the fiscal note seems to be very misleading. It says that we're going to see all these reductions in taxes. If they're not being collected now, then you're not going to reduce. This to me looks like a massive tax increase. So I know this committee has been working very diligently to look at ways to help citizens in Maryland get a little bit back on their tax expenditures, and we hope that this will be one. This is one that could get pretty massive in a hurry, and we want to nip this in the butt now before it gets any worse. So with that, we would support a favorable report on House Bill 1282.
Thank you. Next, Kevin Addix for 2 minutes, please.
Thank you, Madam Chair, Mr. Vice Chair. Kevin Addix with Grow and Fortify, representing the local wineries, breweries, distilleries, and also value-added agriculture in the state. First, yes, thank you to Delegate Hornberger, and Colby said it very well. I would say the state has enacted numerous statutes and policies designed to encourage farming, to increase the viability of farms and preserve them from development. That's been a stated goal of the state of Maryland. Jurisdictions authorize certain activities on this land. The land has to be zoned agriculture, and there has to be active farming already in order for the county to go along with these uses on farms. These activities can include wineries, creameries, agritourism, value-added agriculture, corn mazes, pick your own, you name it. Then in the middle of the pandemic, SDAT, and just to be clear, this is the State Department of Assessment and Taxation, makes an interpretation that's different from 20 years of interpretations, that these activities are now commercial as opposed to agriculture, rendering significantly higher property taxes. This penalizes farmers who have developed these activities on their agriculturally zoned land, on their county approved for these uses property, and it's untenable. And so we're asking that this committee take a supportive vote on this legislation to codify that these activities should be taxed as agriculture. Thank you.
Thank you. William Fega, I don't see him in here.
Yeah, that's Mary Akers.
Oh, okay. Go ahead, please.
Good afternoon, House Ways and Means Committee. I'm Howie Figge. My wife, Chris, and I own Mary Akers Farm in Howard County, and I want to testify in support of House Bill 1282. For decades, we have worked hard to maintain our buildings in a manner that is both pleasing to the appearance of the farm, as well as in the best interest of maintaining the integrity of the buildings themselves. To then be expected to pay a commercial assessment value is a hardship that is unfair, not only to us, but to all of the ag community. It is unrealistic to think that because we take good care of our buildings, for whatever reason, they should be taxed like they are being used in a totally different way. Agriculture is hard enough to make a living at. Why would anyone believe this unfair taxation is justified? Please consider this bill as a good bill and push forward with it to make agriculture safe from unnecessary burdens that threaten the livelihoods of those of us dedicated to doing the best we can with the least from the public, while we are preserving the land for the future of all of us. Thank you very much.
Pamela Giganti, please, for 2 minutes.
Hi, good afternoon, everyone, and Madam Chairman, thank you. My name is Pam Gigante, and I, along with my husband, Mark, own 61 Vineyard, an on-farm winery and value-added producer in Montgomery County. What brings me here today is that on January 14th of this year, I found on my security footage that we were visited at our tasting room. We were closed at the time for winter break, but these unknown persons showed up. There were 3 individuals walking around measuring our tasting room. This is a barn, by the way, that has been on the property for 80 years. We were not notified prior to the visit. They didn't leave a note that they had come by, and I have heard nothing since. But I was concerned and I started investigating, and I became aware of reassessments that have been going on around the state, changing assessments from agricultural to commercial for some farm buildings. And really I was confused. Why is this even a thing? No notice, no discussion, just a big new tax bill. Please know that my husband and I have budgeted and planned for years to know what our expenses are and how we will manage them. We have not planned on this unknown additional surprise expense, and it will create a hardship. We have already committed our funds for the year to new plantings, new equipment, production expenses, and new hires. A large bill at this time will negatively affect our operations. This whole situation is upsetting and feels punitive to our operations. So your help in correcting it now is needed and very appreciated. Thank you.
Matthew Bowl, please, for 2 minutes.
Good afternoon, Madam Chair, members of the committee. Matthew Boley of Rifkin Wiener Livingston here on behalf of Maryland breweries, wineries, and distilleries in support of HB 1282. I'd like to thank Delegate Hornberger for sponsoring this important legislation. Here's why we need this legislation. SStat has begun assessing these mom and pop farms as non-agricultural establishments. Let's consider the impact of this policy. That means Maryland farmers in 1 year saw their tax assessments increase anywhere from $2,000 to $10,000 per year. I suggest to this committee that any policy decision that creates this outcome ought to be reversed. This type of unpredictability is something that will have an extremely detrimental effect on our Maryland farmers. Additionally, looking at this section of the code, Tax Property Farm and Agricultural Land, Section 8209, it has not been amended since 2006. I am unaware that SStat received guidance from this body that they should change their assessment policy. We're only aware that this tax increase has been levied by SStat in the past few years and months, and without any guidance to support that decision. Regarding the fiscal note, I do not believe that the fiscal note is accurate. How can the state have reliable projections on revenue that has not previously been collected, that was not supposed to be collected? The fiscal note shouldn't be relied on. But let's imagine that the fiscal note is correct. Madam Chair, the impact of this policy choice by SStat demonstrates that we need this legislation. If SStat can squeeze over $80 million a year from these small mom and pop entities, that is exactly why we need to pass the bill. Farmers operating on such thin margins who have resorted to agritourism as a reasonable way to diversify and increase their revenue streams, who have long been under economic strain, even more so in the face of the pandemic with inflation, labor shortages, supply chain disruptions, and the like, cannot continue to operate under these conditions. The approach that SStat is taking is exactly how we lose family agriculture and open space. Policies like this is why a farmer makes a decision to sell the family farm to a housing developer or some other commercial entity. Finally, we have been working with MACO on amendments that hopefully will eliminate their opposition. The intent of these amendments is to clarify that these accessory uses are secondary to the primary use of the land, which is for active agricultural use. I do not have language yet to share with this committee, but I will submit these amendments as soon as possible. Madam Chair, I urge this body to issue a favorable report.
Thank you. Next, unfavorable, Kevin Canale, please.
Good afternoon, Madam Chairman and members of the committee. Kevin Canale here on behalf of the Maryland Association of Counties in opposition to House Bill 1282 as it's come in before you today. So first of all, the fiscal note is the fiscal note. I'm not one to challenge DLS on their assessment. And I will say that the county concerns about this bill generally are that it will create an uneven playing field locally. So local governments try to pull all the right levers, right, to make sure that we maintain a balanced playing field, and we enact policies to incentivize development in certain areas. And we certainly are not here to say that agritourism, dairy, things like that are obviously agriculture, to save the family farm should not be assessed at the proper rate. I also can't speak to SDAT or how they're assessing these activities, these structures, but I can tell you that in counties that are trying to incentivize development, let's say in an urban area or a downtown area, and a business comes in and they put a bunch of money into an historic property and they open up whatever the business is, whether it be a wedding venue or a brewery, and then this bill passes and somebody goes and they stick one of those businesses on ag land, and all of a sudden they're paying 10 cents on the dollar versus the person who put all the money into the business in a different area, in a commercial zone where a county is trying to incentivize development. So the concern is really about the bigger businesses, the wedding venues, the breweries that, you know, maybe aren't on ag land that's an active farm. And I appreciate the comments earlier. We are working on amendments to address those concerns, but we want to make sure we are not creating an uneven playing field and undoing a lot of the things that local governments have done to try and maintain an even playing field for businesses. So with that, Madam Chair, we are working on amendments and we're hopeful that we can get to a place where we can agree on how to put guardrails on this bill to make sure the fiscal note doesn't come to fruition. But we'd ask for an unfavorable report on House Bill 1282 as it sits before you today.
Thank you. Next, Justin Fiore, please, for 2 minutes.
Thank you again, Madam Chair, Mr. Vice Chair, and committee members. Justin Fiore here on behalf of the Maryland Municipal League in opposition to 1282. I won't repeat what has already been said by my colleague at MACO, and I certainly can't speak for SDAT, but it does sound kind of like the business model has shifted for certain operations and the tax structure is simply catching up. That said, I'm sympathetic to those who are now being surprised with a higher bill. I think that's a bad practice. MML can agree that mom and pop farm stands and the corn maze isn't commercial. We're just talking about the piece of property and equipment that contributes to obviously commercial aspects. While our members are proud to support and help market agritourism and other value-added business models, we believe this bill presents a tax fairness issue that can create an imbalance. In the same way the state of Maryland has programs that keeps it competitive with its neighbors, what happens right outside our jurisdiction can impact the businesses within. Even under the ridiculous assumption that the bill wouldn't impact a single municipality, I know we have farmland, but even if we said it didn't for a second, it would amount to an $85 million advantage to breweries, wineries, distilleries, and wedding venues in county ag lands. For these reasons, we respectfully request an unfavorable report. We haven't seen any amendments yet.
Okay, questions, Delegate Buckle.
Thank you, Madam Chair. So this, I guess, you know, whoever, whether it's Delegate Hornberger or one of the other folks from MACO, you know, no one from SDAT apparently is testifying. And so when I looked at this, I thought, you know, you can look at it kind of either way. I hear a lot of compromise talk, which I like, if we can find some amendments to really define what is agricultural versus which is something that's maybe, you know, a loophole to it. But what I'm most concerned about is, what we're saying that we change the rules in the middle of the game. Because if you built your farm-based winery or your improvement, your building, your whatever it was, and was assessed as agricultural in 2015 and 16 and 17 and 18 and 19, and then the legislature didn't do anything to change it, there wasn't a court case that I've heard. I mean, that's what I do for a living. Sometimes people file court cases and get a definitive ruling from a tax court or otherwise that how something should be assessed. I'm very concerned that we're pulling the rug out on some of these folks that we've heard, and I'm sure hundreds of other folks, and saying we treated you a certain way, you invested based upon a certain assumption, legislature didn't do anything, court didn't do anything, we just changed it on our own. And now you owe us a lot more money out of the blue. And so, you know, does MACO, MML, or any of the opponents to the bill, you know, are you guys basically willing to work to say, hey, we have to acknowledge that if we haven't already been getting this higher tax rate from these people at the local level, maybe we have to grandfather them in, and maybe we could look at it for someone who wants to build something next year, something new. If they're told from the beginning, hey, this is going to be viewed commercial if you build it, then maybe that changes their expectation set. But Ms. Giganti and the others, they build all this stuff being told by their financial advisors this is the way it will be treated, and now you're pulling the rug out. So is that something you'd be opposed to?
So speaking for Mako, I mean, I again, I agree. I don't think we should change the rules in the middle of the game for anyone. And I don't know what's going on. I mean, we assess on a 3-year cycle. I think that SSTAT may be looking at the actual use. That's how they assess, right? And if they look at something and say, well, we think this is commercial, I don't know. And I'm not sure what the problem is there. But yeah, grandfathering people in, I mean, if that were the bill and we're not talking about future projects, I don't think that's, something that the advocates would appreciate. But, yeah, I think that if people were told something that they're going to be assessed a certain way, it makes sense to assess them that way. Now, if SSTAT says this is not ag, this is commercial, I think that's a separate conversation. So I don't know if SSTAT's necessarily been changing the rules, or if they're looking at things now and saying, we actually think this is commercial activity, so we're going to assess it that way. And I think there's a policy debate to be had there about whether or not something is actually ag, or if, it's considered commercial. So
yeah, and I mean, that's fine. But like what you said, I guess I just have if you were assessed on a 3-year cycle for say 17, 18, 19, and you were assessed as ag, and you already had your barn or your tasting room or whatever there, and then you came back and got assessed for 2021, 22, and they said, oh no, that one's now assessed at commercial. That seems to me to be just wrong. And, we should do something about that to protect people from that happening without them having to, expend through lawyers. I hate to say that, Madam Chair, I'm usually an advocate for, hire more lawyers. It keeps my kid in college, but at the end of the day, we could do something that prevents you. I don't like changing the rules in the middle of the game. There is a policy argument to be made, but for people who've already made that investment, I think the argument's already been made for them. They were already treated. As long as you were treated at least once as ag property, I don't know why we would countenance changing that now, even if the activity changes somewhat. It's still on an ag property overall. So I appreciate Mako's. You guys are always, I think, willing to work on certain things and compromises, and maybe that's the way to go. Thank you.
Questions? Okay, seeing none, that concludes the testimony on House Bill 1282. Our final bill of the day, House Bill 979, Delegate Kaiser, and there are 5 folks signed up after Delegate Kaiser who will have 2 minutes each to testify. Delegate Buckle, take your hand down, please.
Madam Chair, members of the committee, thanks for having me today on House Bill 979. And I would like to thank my one and only co-sponsor, Madam Chair herself, for her support of this tax sale legislation bill. I would be remiss, it is the data were read because of the pictures, but I did bring my George and Alistair socks for everyone to have a look at. So, here they are, beautiful stuff. They just don't go with today's red jacket. Anyway, so tax sales. Last year I had a bill really extending the homeowners protection program. And the idea behind it was to divert vulnerable homeowners from the tax sale process in order to minimize their tax collection costs. What we're trying to, and really to keep people in their homes. And what we're now trying to do is really extend this homeowner protection program to have SSTAT purchase the liens and keep all homeowners out of the tax sale process, all low income, low net worth homeowners. I think you have all heard about some of the reasons for some of this type of tax sale legislation in the past. The system was created to help jurisdictions not having to deal with some of these property taxes, but over time, we really discovered that it was taking a toll on our most vulnerable residents, and it became a very exploitative system. And some elderly poor people across our state who are on fixed incomes and no longer have a mortgage are being hit with the tax bill that they're unable to pay. And I think we've heard stories of people with a $750 tax lien that over time becomes interest and payments and all these other things for many thousands of dollars. And to me, this bill gives us further opportunity to do something about it, stand with our seniors, keep our neighbors intact, keeping their hard-earned asset, their home, understanding that someone could have $80,000 of an equity in a home and lose it in tax sale because of an inability to pay a small bill. And just standing with our county municipal governments who supported the prior program and really support this. And again, just trying to remove the predatory process, the loss of home, loss of any equity and the way that tax sales can destabilize communities. And I would be remiss, of course, if I did not thank Stan Ward, who educated me for years on the about tax sales and got me motivated on this issue. So thank you, and I urge favorable consideration of House Bill 979.
Councilwoman Ramos, please.
Thank you, Chair Atterbury and members of the committee, and also to Delegate Kaiser for putting in this bill. Thanks for allowing me a second chance to come before you today. This is a very important bill. I hope you are supporting it, HB 979. We need all the tools in the toolbox to help people save their homes from tax sale, but also to make sure that our municipal and county governments are made whole. So that is exactly what this program does. And it also authorizes the tax sale ombudsman, which was created under this legislation from this committee and Delegate Kaiser, to come up with a way so that homeowners can automatically apply as opposed to having a cumbersome process. So this is, again, another tool in the toolbox to help us with making sure that residents can avoid tax sale, and I urge a favorable report. Thank you.
Kevin Canali, please, for 2 minutes.
Thank you, Madam Chairman, members of the committee. Kevin Canali here on behalf of the Maryland Association of Counties in support of House Bill 979. We spoke about tax sale earlier, and again, counties want to make sure that we can pull all the levers to keep folks out of tax sale if we're able to do so. We think that this bill is a continuation on the bill that you heard about from last year. And really, this makes sure that people have access to these programs that do help people facing tax sale with cost avoidance and provide help like payment assistance, foreclosure mediation, and other services. So with the fiscal note here, with the appropriation, we think that this bill will enable the program to deliver on its mission to divert homeowners from the private tax lien process, minimize collection costs, and assist generally with keeping folks out of tax sale. We like that a lot. We think this is a great bill, and we think that this is a continuation and will help the program to actually deliver on what it intends to do, and that's to keep as many people out of tax sale as possible. And we'd ask for a favorable report on House Bill 979.
Thank you. Next, Asia Mallory, please, for 2 minutes.
Madam Chair, members of the committee, my name is Asia Mallory. I'm the consumer staff attorney at the Maryland Volunteer Lawyer Service. In our tax sale prevention work, our goal is to protect communities and homeowners, especially those that are low income and elderly who face the devastating impacts or effects of the tax sale process. The Homeowners Protection Program provides our clients the ability to avoid private tax sale, the private tax sale process that is often confusing, predatory, and it also gives them the ability to have an alternative means to pay their property taxes that will or can be more affordable. Especially with the automatic enrollment into the program, my clients will have, who have difficulties completing paper or electronic applications, will have that barrier removed. HB 979 increases the ability of the state to protect homeowners and to stabilize communities. Consequently, we urge a favorable report on HB 979. Thank you for this time to testify.
Next, Ari Plout for 2 minutes, please.
Good afternoon, Madam Chair, Mr. Vice Chair, esteemed members of the committee. My name is Ari Plout, here on behalf of the Maryland Tax Sale Participants Association in opposition to House Bill 979. We're in opposition to this bill because automatic enrollments may often enroll properties of deceased homeowners or vacant properties or even abandoned properties. And if these properties are automatically enrolled, this will contribute to neighborhood blight. I touched on some of the other concerns and existing laws in my previous testimony for 1196, so I don't need to repeat myself. And I would just urge that the committee allow more time for these laws to take effect, because there are, as I stated before, there are already existing programs. And with that, I ask for an unfavorable report. Thank you.
Thank you. Neil Eskin for 2 minutes, please.
Thank you, Madam Chair, members of the committee. Neil Eskin on behalf of the Maryland Tax Sale Participants Association, coming with an unfavorable position to House Bill 979. Just to add on to what Ari just mentioned, this bill would include the automatic enrollment of properties where current owners are deceased, and subject properties are vacant and abandoned. To avoid overextension of the program, we strongly suggest limiting the program to only verified signups by homeowners and not automatic enrollment. This limitation will help reduce neighborhood blight and nuisances, and it will allow taxing authorities to collect delinquent taxes that would not otherwise be collected due to the vacancy and abandonment of such properties. The $20 million appropriation requirement in this bill puts an unreasonable burden on Maryland taxpayers and the 2024 annual budget bill, and an unrealistic burden on the State Department of Assessments and Taxation. Baltimore City specifically, but all other Maryland counties have such a hard time already collecting tax delinquencies, and I'm not really sure why the state would have any more luck in this new program. Like I already mentioned, lots of recent legislation has been passed over the past few years, creating a lot of opportunities and help for homeowners. And we just need to give these changes and programs a chance before reinventing the wheel and causing undue burdens on the state and Maryland taxpayers. So for those reasons, we oppose the bill, and I'm happy to answer any questions.
Are any questions? Okay, seeing no questions, thank you, Delegate Kaiser. That concludes the testimony on House Bill 979. And that concludes the bill hearings for the Ways and Means Committee today. Committee members, just hold on one second while folks exit and we get off the live button.